Welcome everybody to episode 22 of the Safello Show. We have a great show for you today with Fireblocks. But before we get to that, first the sponsor message of Safello itself. For those who don't know Safello, go to safello.com. That is SAFELLO.com. You'll recognize it by this cute little logo. We have everything here, web product, but we also have the mobile app. On the main page, you will see a QR code to the app. Let's see if we can show it. Yeah, there's the QR code. And we have it on iOS and Android. If you go all the way down on the website, here you saw some graphs of the prices. But if you go all the way down and down, you also see our socials here. Twitter, LinkedIn, YouTube, where you can find our content, of course. But also Discord, where we have a community and customer support and discussion around our stock. And about our stock, you can find more information if you go to the investor page, which is right next to it. So here you find everything about Safello stock, which is traded on Nasdaq OMX, so Nasdaq First North Growth Market. And here you can find the financial report, information about the share, but also the latest press releases, which we can have a look at. The latest information that we just put out is the content that we are putting out now is also on the app. So when you download the app, it will have not only content from Safello, it has the Safello show, it has Consensus button that we sponsor, and we have also all the articles from Bitcoin.se, the largest information website on crypto education that we actually acquired last year. And then, like, if we look at the latest press release, I can just repeat that the Global Coalition to Fight Financial Crime appoints a fellow CCO to chair a new expert committee focusing on digital assets, which is a big deal for us in case of, in terms of actually being part of the European regulatory debate. So have a look at that one and any of the other press releases. And with that, we can move on to the show. And today we have with us Niklas Reichert from Fireblocks, Sales Director in the Nordics. Welcome, Niklas.
Hi, Frank. Pleasure to meet you. To be here.
Yeah, we're going black and white here on the hoodies, huh?
Yeah,
It's a standoff.
I was actually thinking if we should swap hoodies to confuse the listeners first time, but it's good to be here and have some more time talking to you. I mean, I know our meetings have always been quite short recently, but looking forward to this.
You just came from London, if I understand correctly, whereas I just came from Miami and still recovering from the Miami sun.
Exactly. Yeah, I didn't get as much tan as you, but I think summer in Sweden is at least coming up, so looking forward to that.
Yeah. So
Cool.
where do we start? Fireblocks. I mean, obviously Safello has partnered up with Fireblocks for our custody solution, but maybe we can start with some of the beginning. Like, tell us about Fireblocks, the history, and what Fireblocks is all about.
Yeah, definitely. Glad to do that. So as you might have know, or as you know, Fireblocks is a crypto custody technology provider or infrastructure provider. The company was founded after the infamous hack of the Lazarus Group back in the days, where our CEO and now head of R&D were sent to investigate the hack. And during this investigation, they got the idea of founding Fireblocks. So obviously, back then they found that there was a shift from where hackers saw obviously potential to earn a lot of money by hacking companies that interact with digital assets. And when you interact with digital assets, we saw that there are several ways where you can exploit your assets. Obviously, the first and most obvious is the private key. So everyone needs to think about the protection of the private key and how do you secure your private key. But if you just want to keep your assets safe, to be honest, you can keep it on a ledger or somewhere on a hardware wallet. Dig it in somewhere. Don't tell anyone where you dig it in. Dig it out in 10 years and hope your Bitcoin is worth more than you need for the rest of your life. But they had to view that if we're going to see main adoption or stronger adoption of digital assets in the future, you cannot compromise scalability and security. So you need a solution that is scalable, flexible, and fast, but as secure as it can get. And that's how Fireblocks basically came came to birth back in 2018. So we're counting now from the first client 3 years or 3.5 years. We have now more than 1,000 institutional clients, B2B clients. We have raised over $1 billion in funding, led by Sequoia, Paradigm, D1 Capital Partners, and we are operating globally, headquartered in New York, R&D in Tel Aviv, and we are now 400 employees plus. So that's Fireblocks in a quick nutshell. To our clients, we count some of the largest crypto companies on the planet, including Celsius, Revolut, BlockFi, B2C2, Enigma, Three Arrow Capitals, and several others. Obviously, in the Nordics, as Frank said, we've been working with Safello for now over a year, and it has been a real pleasure working with you. And I think the main objective that we really have is to make it as easy as possible for companies to interact with digital assets, and obviously as secure as possible. So that's what we try to bring to the market, and I think we've been proven to do so quite well so far.
Well, with 1,000 clients, it's hard to argue against that. So you raised $1 billion in total. Like, at what valuation is Fireblocks today?
Yeah, Fireblocks is now valued at more than $8 billion. So we are the most well-funded infrastructure provider on the planet. But maybe just to circle a little more back, because we not only provide the wallets, right? So the custody part, obviously we can divide custody into hot, warm, and cold. We don't like to compare hot, warm, and cold with somewhat secure, and super secure. For us, it's rather hot is fully automated, warm is manual intervention, but still online, but cold obviously is fully manual. And despite that, we also believe that you need to be able to interact with your clients. So we have the Fireblocks network that allows you to settle securely between you and your counterparties. Despite Fireblocks also allows you to securely access any DeFi protocol or decentralized app on the planet that supports Wallet Connect or MetaMask. We also support tokenization and many more things. So I think now I covered what Fireblocks is doing quite briefly.
So one of the, like, technologically speaking, that is one of the things that you also mention in your on your website is MPC. Maybe you can run through what that means and how it helps the security model for companies like Safello. Yeah.
So MPC in general stands for multi-party computation. And if you consider that back in the days you had only the Bitcoin protocol, and for the Bitcoin protocol there was something invented that we call multi-sig or multi-signature. And multi-signature has basically an idea to mitigate the single point of compromise. So meaning you don't have one single person that has authorization to do a transfer of the Bitcoin. So with the time, obviously, we've seen so many blockchains popping up, so many new foundations that have been tackling different type of projects, different type of scalability issues, which means that MPC hasn't been blockchain agnostic. Multisig hasn't been blockchain agnostic enough. So the new wave of security around the private key is called multi-party computation. And Fireblocks has developed its own MPC CMP algorithm. So it's an evolution of the MPC algorithm that we've seen in the past. And it basically creates 3 key shares instead of multiple private keys that are hosted on geographically different locations in tier 1 SGX enabled cloud providers. And the private key never has to get together to one piece to actually sign a transaction. Meaning for a malicious actor, it's very, very difficult We would never say impossible because we're a security company and would be unwise to do so, but it's theoretically close to impossible to get hold of your private key, since it's just generated on demand in Fireblocks as well. And this is the first layer of our security, since we follow a multi-layer security approach, and we don't believe that MPC is actually a silver bullet, right? Because you can't just put your money on one horse. You need to basically add multiple layers of security. So the second layer that we have is called confidential computing, and we leverage a technology called Intel SGX that basically protects your cryptographic material at runtime, but also at rest. So your cryptographic material or the algorithm never needs to be decrypted to actually sign the transaction. And then we have the third, third layer, which is called the transaction policies. And the transaction policies is really something that you can set for your business individually, and it functions like a firewall rule set that allows you to basically limit who of your colleagues of your team has what rights to transfer what funds. It could be as simple as, if Frank wants to transfer 50K of Bitcoin, he needs 4 out of 5 approvers, because you obviously don't want a single point of compromise that someone, even if your accounts get hacked, right, your login details get hacked, Frank, you get phished, whatever happens, and someone tries to initiate the transfer, you don't want that person to just be able to transfer the funds out of your control.
Ideally not. No.
So this is really the multi-layer security approach that we follow. And it's really about the flexibility that we keep there.
So, but you also still introduced recently, I think, actual cold storage as well as part of insured solution, right?
Exactly. So we have just last year, we have, because of our MPC CMP algorithm, because in the original GG18, and I think maybe it's a little too technical if I go into the details here, but you have multiple rounds of computing. So the tenants, where the cryptographic or the algorithm is stored on, they need to communicate to verify the transaction. Obviously, in a cold storage scenario, it means that the key material is kept offline. So it cannot communicate with each other, which is a problem when you take multi-party computation into cold storage. But with our MPC CMP algorithm, we have reduced the amount of computes that is needed to sign a transaction to 1. So basically, we achieve a cold storage environment because we keep one of the 3 key shares offline in an air-gapped device at any point in time, and it's always a 3 out of 3 algorithm. So you cannot sign a transaction with only 2 out of 3 or 1 out of 3. It's always 3 out of 3. And we recently also got now our cold storage insurance offering certified after we've been obviously going through some heavy due diligence work of the insurer, which means that every client of Fireblocks could get its own dedicated cold storage insurance for up to X hundred millions, depending obviously on how much you're willing to pay for the insured amount.
So well, insurance is a big topic because you get to huge premiums. Is there a way to where you guys been able to do something to make it more affordable for parties like ourselves or other counterparties that we might be interacting with, that we would help with a Fireblock setup?
So obviously, right, I think it has been our objective all along to bring access to digital assets to the mass. And obviously one big hurdle around this is still education and insecurity around, okay, we don't really understand what risk does it bring to us if my company now wants to interact with digital assets, but having an insurance might make you sleep better at night, right? Because you, in case of something bad happens, you can still claim some of the lost funds back, obviously.
Yeah.
So we have been pushing a lot on getting a quite affordable rates, and I think we will have some marketing material around it coming out very soon. The rates are very good in my eyes. I cannot disclose them right here, right now, live. And it will also obviously there are some variables that needs to be decided on by the insurance broker. But from what I've seen, it's very fair for the amount that you can see.
And what I believe there was a mention of in the MiCA regulation is that some type of insurance for institutional clients might be becoming a requirement as well. In which case, it's good that you have providers like Fireblocks, obviously, that are able to provide insurance. Even though that can still be tricky. I guess you guys had one party that wasn't too happy at some point, but they had the setup incorrectly done, which was around Ethereum, I believe, if I'm not mistaken, Niklas.
Ethereum 2.0, exactly.
Yeah. We don't have to go. Do you want to comment on that or no?
I mean, if it's a question, right, that has been asked, but I think it has been all stated quite clear in our public statements. I think the general idea of Fireblocks is, right, that we provide the infrastructure to use. So we're not the legal custodian of the assets. So you are responsible for the private key, backing up the private key. Obviously, this is part of the onboarding within the first 2 weeks to go through a disaster recovery. It's mandatory. We also have third-party partners with coin cover that could store this externally with you. So we still try to make it as easy as possible. But the main benefit of being actually the custodian yourself is that even in the case that Fireblocks cease to exist, we have a huge outage. Whatever happens, you have the possibility to recover your funds, and with that also your clients' funds. So you're not dependent on us. If you decide to recover all your funds, it's all in your hands, and that's the main idea.
Yeah, and that's maybe good to understand for the audience that you're a technology provider at the end of the day, and for instance, for institutions that would want to have custody, they would still likely want to interact with a company like Safello that is an actually regulated custody party that is leveraging the Fireblocks technology.
I think you're completely right? So we have the perception that we believe that, first of all, we don't want to have a conflict of interest with our clients, right? So you, as you say, Frank, you can act as a legal custodian of digital assets because you've been regulated by the Swedish FSA. If we would want to, and you would use Fireblocks, right? And if we would decide to become a custodian ourselves, we would have a conflict of interest because we could go to your clients as well and say, hey, that's, and that's really our point. That we want to enable, and everyone that wants to or can do direct custody, please use Fireblocks. If you cannot or do not want to, you can use someone that offers custody using Fireblocks technology, right? So you're still going to get the best and most secure infrastructure on the market, either or.
So I'll make this one easy for you, but so people are looking at different custody solutions. What do you think are what are the key reasons to use Fireblocks over anything else in the world? Obviously, we made our choices that hopefully you're going to highlight now, but maybe that's a good one to just stress.
I think that the main differentiator for us is, again, we are an infrastructure provider. So what we focus on is really putting all the funding that we raise in building the most secure infrastructure on the planet. And it's not only about how does the market look today. You know it as much as I do it. The crypto or digital asset market is evolving so quickly. Exactly. And if you cannot keep up and develop your technology accordingly, you're going to be left behind. If you want to build it yourself, you're going to end up spending millions or billions of dollars building it yourself, maintaining it, developing new features. And also that is what we're trying to take away from you.
Yeah.
And we don't have any other reason to invest our money in except for building out new features, scaling existing infrastructure. So you can really rely on us, not only providing you the technology that makes you the market leader today, but also tomorrow, next year, and in the coming years.
Yeah.
Secondly, I think what is really important to mention is that we as Fireblocks, we own everything that is critical to our infrastructure ourselves. We've developed our own MPC CMP algorithm. We host the node infrastructure ourselves, right? So we don't outsource any of the services that are critical for the security itself. Of course, we're using multi-cloud strategy. Obviously, we're using cloud providers to do some, but the critical parts and the baseline of our infrastructure, we own. And thirdly, I think we are the most well-funded company. And we are used by some of the most scaled crypto companies on the planet. And Frank, you know it yourself, right? On days like today or tomorrow, when the crypto market is very smooth running, you have transactions coming in, coming out. That's not where your infrastructure is going to be tested. It's going to be tested on days where we see a huge plunge or huge uprise, and suddenly everyone wants to sell or wants to buy. Yeah. And then it's going to test if your infrastructure is built for scale. Because if it's not, your transactions of your clients will not be confirmed and they cannot sell or buy the assets. And that's, on those days, your clients will get annoyed by the services you provide. And I think that's really what we have proven, because we have, I think, currently around 250 billion per month in volume that our clients really drive using the Fireblocks infrastructure.
And what was Fireblocks founded again? What year?
2018.
So no bull market yet then.
No bull market yet, exactly. So we're preparing for that case. I think our head of R&D is sweating already for those days, but they're doing everything to get prepared.
I mean, the historical picture that we have, so there have been different providers over the years, and I remember that we did an implementation with Gem.io, and they turned out, then they stopped providing their APIs for companies to integrate with, and they became more of a healthcare company. And we did other kind of half implementations, and the big conclusion from that work at Safello was, because we tried to do that in a completely non-custodial way. So there were two conclusions that we walked away with. Is like, well, at the end of the day, we need to be a custodian. It's both from a practicality point of view as well as from an end user point of view. It just becomes a much easier experience, and the vast majority of users want that. Even though you still need to retain the option to be able to pull out your cryptocurrency, which is of course the debate that's going on now with unhosted wallets on the MiCA level, where they're looking to stifle kind of people holding their own crypto balances. So we're a big advocate of that not being the case, and people should be able to retain and maintain their own crypto balances. But that was one of the big hurdles, and the other one is, of course, you need to look at the size of the company as well that you're interacting with, and the longevity of that. And we've seen multiple times over the years some of your competitors being bought up or discontinued.
Yeah. So especially last year, right?
Yeah, you want to comment on those acquisitions, or?
I mean, it's public knowledge, right? So I think what we've seen, especially in the last year, is that you have a lot of the large institutional corporations waking up and saying, okay, it's going to happen. We're going to see mainstream adoption. And they're going to look back at their tech stack and say, F ... we are not prepared. So what can we do, right? Either we have to outsource what we're going to do with someone like Fireblocks, or we have deep enough pockets, so we need to acquire someone. And we saw it with PayPal acquiring Curve. We saw it with Coinbase acquiring Unbound. We saw it with Gemini acquiring ShardX, Celsius acquiring GK8. So, the list is very long. And
I know.
for you as a client of Fireblocks, you obviously want to avoid the fact that, hey, we're going to invest in someone or work with someone, and in half a year's time, someone like Visa, Google, whoever's coming out there, just writes a check. Hey, we acquired this company, and you need to re-platform. So this is obviously also security that we bring as Fireblocks, because we don't look to be acquired. And I think at the 8 billion valuation, there are not many people or companies out there that would actually do so or would want to spend that money. So that's my opinion.
Yeah, well, you never know, but I think it's an important argument, and of course, contractually, I'm sure you're bound to serve clients for a longer period of time. But is then the end game for Fireblocks that it would become a public company?
I think there's two options, right? Either we stay private, or we become a public company. Yes, I think that's the vision that we follow currently.
Yeah.
So I've been asked the question.
That's a very political non-answer. I love it.
No, I've been asked.
There are indeed two options: go public or not.
I've been asked many times, when you're going to launch a Fireblocks token, so I can invest into Fireblocks.
Oh yeah, okay, that's the third option. Yeah, that's the third option.
I think that's a question for our board and our founding team. So not a question to ask myself.
That might not sit well with some institutional clients you're serving today, but I want to have first, before we go into sort of the Nordic landscape, we talked about, and that was the other point actually I wanted to make about the evolution of the product, right, and how quick the developments go in the market, and for the same reason we are using crypto forensic software that are the market leading ones. In our case, we work with Chainalysis, of course. And you're not going to do everything yourself. If you try to do everything yourself, you're going to have a mediocre product, and you need to stick with your core. So the philosophy is kind of the same of how we run Safello, and that is often misunderstood. People want to do it yourself. Yeah, you can spin up a Bitcoin core node yourself, and you can run a Bitcoin wallet. But how you're going to deal with all the innovation taking place, NFT, staking, protocol changes, different cryptocurrencies becoming more popular. Can you give people a little bit of insight on how you guys look at innovation in the space, how you serve it, and what you see on the horizon going forward on what you're looking to offer, potentially, whatever you can disclose?
Yeah, 100%. So and funny enough, as you said, we were in London at our quarterly business review just today, and I've been talking with some colleagues now. If we look back a year from today, last year we were talking to crypto companies, some banks, some asset managers, but now today we have meetings with fintechs, car manufacturers, brands, from to payment providers, to really, the scope has broadened so much. And I think
what about car manufacturers? What are going to have it on their balance sheet, or?
I think there are obviously multiple angles to what every corporation could use digital assets for. Yeah. I think payments is going to be a really big thing. Remittances, cross-border payments, payment collections. So,
I want to have a self-driving car that pays the car in front of me with cryptocurrency to get out of the way. Is that? That's
I think I need to talk to Elon.
I'm sure he's thinking of it.
No, and I think obviously on the balance sheet, I'm not sure, but you saw it as much as we did, the NFT hype. So obviously, I think NFTs is going to be a big thing going forward. I don't think it's a secret that we at Fireblocks, we already can provide custody and transfer and settlements of most of the NFT standards that you find out there. We're developing more and more products around NFTs. So we believe it's going to be part of our core offering going forward in some type of form. Any company that interacts with digital assets will interact with NFTs in some way or form. We also strongly believe that staking will be something that it becomes more and more relevant, because for as long as the regulators acknowledge the difference between DeFi yield generation and staking and not put both in the same bucket, we believe that a lot of, especially the regulated institutions, might want to offer some yield generating products where you can just delegate the funds to the different validators and still keep custody over the funds, so you don't take the counterparty risk essentially, and still offer very attractive yields to your B2B, B2C clients, ranging obviously from 5 to 20% APY. And I think thirdly, we still strongly believe in DeFi, and I think we have one of the strongest DeFi offerings right now on the planet. And we, as you know, we leverage either we have an API for that, so we can DeFi SDK, or we have a wallet connect functionality to any decentralized app, so you can connect your wallet to the decentralized app without compromising or reducing your security around the private key. So the private key will still be handled in the same way. Plus, you're going to have the transaction policies that I elaborated before to limit who can actually interact how with the different smart contracts out there. And we're still trying to improve and make the functionalities around DeFi even larger. And going back to the regulation and that you mentioned before around unhosted wallets,
our favorite topic at Safello.
I think the question will be whether we're going to see ID on chain sooner or later, whether it's cryptographic ID layer on chain, so it's not obviously, or direct achievable, or we're going to see more things like Aave Arc that we've launched together with Aave. So permission DeFi pool where the companies need to be whitelisted to actually participate in this DeFi pool for regulated entities, right? Because otherwise they don't have the possibility by the regulator. Create your own.
So Fireblocks is going to create a dark pool.
I don't say we're gonna create it. It's just for us. We're trying to figure out how to balance regulation. Or obviously, we need to enable our companies to comply with any regulations coming out there, because you can't hide from it. We can't hide from it. So we need to build a product that allows you to still interact with the interesting innovation that is coming out of the crypto space, but still being compliant. I think that's the philosophy that we follow.
Interesting. Let's see. I see some comments in here, so let's see if there's anything we pulled up now. But otherwise, we go back in the Nordic landscape. Let's pull up some questions in the meantime, so people don't tune out until their questions are answered. Do you have anything? I'm looking at. I'm virtually signaling to Matt in the background. When crypto krona kan bli många intressanta dingen. Okay, yeah. The crypto
krona, e-krona. Yeah, I think central bank digital currencies is obviously something that is on top of our mind, and we obviously will support the interaction for CBDCs in the platform when it comes to that. As you might have seen, the post in the blog, we'll be joined by the former head of fintech from the Bank of England just in a couple of weeks. So
what role is he? What role? In what capacity?
I'm not allowed to disclose that yet.
Oh, okay, okay.
But you will see soon. Don't want to put myself in trouble here, but obviously there are still a lot of questions that need to be figured out by the central banks themselves, right? Whether they're going to use a public blockchain, whether they're going to use a private blockchain, whether it's going to be account-based asset, UTXO-based asset. There are a lot of questions they need to figure out themselves. I would love to have conversations with central banks, just from a technological perspective.
Yeah.
but I hope that we're gonna see some benefit from.
Are you having discussions with central banks?
I think we have been engaging with some around the globe, but obviously, it's part of some RFI processes, so it's official. Just gathering information.
In anything that you guys see, do you see any of them building their CDBCs as actual cryptocurrencies?
I think it's hard to answer that question for sure. And it also depends on what you, Frank, consider as cryptocurrency. So do you consider a token issued on a private blockchain as cryptocurrency?
I don't, but some do.
Yeah, there's the...
well, if that token can exist outside their private blockchain in one way or another, and it can interact with the public blockchain, we have a slightly different.
So you want to build a bridge for CBDC?
I mean, it's interesting. Like in the end, if it's able to interact with the crypto ecosystem, then it's complementary. In every other scenario, it's kind of trying to compete in a way, right?
Yeah, I do actually believe that we're going to see also stable coins and CBDCs coexisting going forward.
But not interacting.
No, I don't.
Not even on a trading level, because you could trade your CDBC against USDC, right? That instant interaction would still be an interesting point of
I mean, theoretically, you could, right? I think it's still going to be dependent on if you're going to have a wholesale CBDC or actually CBDC that's going to be used by us as a retail customer. Right?
Okay.
It's the first iteration that you want to implement in CBDC to make company to company or intra-bank payments or cross-border payments more efficient, faster, cheaper. Yes. Probably,
what Ripple, what SEB tried to do with Ripple between their offices, I think between New York and Stockholm, that they had a proof of concept around moving funds internally more efficiently, which goes into all the efforts that have been done by R3, Corda, and stuff like that.
Yeah.
Okay. Who are probably sitting around the table first and foremost. But I as I understand, eCrona actually has a wider ambition to serve retail clients by undercutting the banking sector. So, or like at least putting less power in the hands of the current banking sector. So we might see a retail component to that, which may then lean towards it would have to maybe interact with the crypto market.
Yeah, I think just the other day, the Riksbanken wrote out an RFI for external providers to participate in. And I think everyone can download the questionnaire. You can have a look at it, what they're looking for. And you can draw your own conclusions from that.
Okay, what are your conclusions? You've read it. What are your conclusions?
Oh, I mean, I just confirmed, right? There are two iterations, right? For the wholesale for retail. So it's definitely the idea. What's going to be launched and how long it's going to take until it's launched.
Yeah.
I don't dare to say. Okay. I just say, with Fireblocks, you can be up and running fairly quickly. But
or you can create your own future that is not compatible with everything that everybody wants in the world. Yes.
But even if you use Fireblocks and you don't know a lot about digital assets and you have slow processes internally, it might take some time. So I don't say if Riksbanken would use Fireblocks, they're going to launch it tomorrow. Right? It's not going to happen. So, but it's an interesting process. And I think it's just good to see adoption of blockchain. Whether it's going to be private, public, we don't know.
Yeah, I remember those days. Like all those companies, including Gem that I spoke before, became blockchain companies because Bitcoin was an ugly word. And then we went full circle where everybody's crypto company again. Let's hope we don't do another cycle of that. But so we've been talking about the Nordic market in the sense of the eCrona. But maybe since you're the Nordic sales director, maybe you can highlight a little bit what is happening in the Nordics. Are we seeing a change in sentiment? what is the general response Fireblocks gets when they sit around the table with, let's say, financial institutions like banks?
So I like to look at, first of all, Europe itself, right? So we have in Europe, we have Germany, Switzerland, and I think also France right now that is quite forward running when it comes to regulation around digital assets. Especially Germany has been taking or bathing a strong leap with actually regulating crypto custody licenses. They allow alternative investment funds to hold 20% of their investments in crypto. So I think this brings a lot of confidence in regulated entities to actually interact with digital assets. Because I do believe, and otherwise you guys wouldn't exist, right, that there is a strong demand, and the demand is just increasing every month from retail customers, but also, family offices, smaller fund managers, to actually invest some parts of their money in digital assets.
Yeah.
And I've seen this now since beginning of last year to today. I would say even the sentiment in the Nordic, where we've had a lot of quite strong stance against digital assets. I think it's public statements that have been issued, that this has changed, right? The sentiment has changed to, it's not going to exist in the future. We're not going to do it, to we actually need to look at it, right?
Yeah.
Because we see so much demand. We see now also BlackRock investing into Circle, right? We saw Bank of New York Mellon custodying all the collateral for the USDC stablecoin with Fireblocks technology for Circle, right? So you have the largest players on the planet officially saying crypto's here to stay, DeFi, blockchain, all is real. So I think even though the Nordics have been much slower than the rest of the world or the rest of Europe.
Can we qualify that or quantify that in slow adoption?
So last year already, we signed several of regulated banks in Germany, in Switzerland, as clients of Fireblocks. So I think we have, for example, Bankers von der Heid, the oldest bank in Germany, SEPA Bank in Switzerland, just to name some, that have been posting themselves or officially saying, hey, we're going to offer that. We've seen a lot of RFPs written out by some of the tier 1 and tier 2 banks in Germany, in Switzerland. So obviously they need to go through this RFP process to actually decide for a vendor, but it's actively taking place that they want to explore it. And that we've seen last year. And we start now to see some interest coming up, some explorative conversations. But I think it's still that the let's say the not guiding of the local regulator hinders adoption or innovation. Because obviously we know MiCA is coming, right? Yeah. It's not happening. So regulators could come out and say, in the worst case, we're just going to adopt MiCA as it is.
Right. Do you see in those jurisdictions, because the ones where you've seen adoption were jurisdictions like Germany, France, and Switzerland, but then particularly Switzerland and Germany, you've seen they've been ahead with the regulatory framework, which then actually also led to more adoption if you go through those cases. So that does give a bit of a preview of what's going to happen with MiCA.
Yeah, definitely. Yeah. I mean, we have seen quite a spike in demand. And I think it's also this breaking the ice moment, right?
Yeah.
No one wants to be the first mover in the traditional asset space, but once there is the first mover, you have this panic moment.
Yeah.
Oh, we didn't expect. We saw it in Australia, right? We saw the largest Australian bank publicly stating we're gonna offer crypto custody services to our clients, Commonwealth Bank. On that day, we had more than 30 calls from financial institutions from Australia and New Zealand. How can we bring something faster to the market than Commonwealth Bank?
Yeah.
So, and I think it's going to happen the same way in the Nordics. And obviously, I'm working very hard on pushing a first mover into this direction. Without, and I mean, you had a great achievement, right? Already published.
Yeah, it wasn't quite maybe the response that you got in Australia, but similarly, it did send some shockwaves, I think, in terms of Avanza publicly announcing this letter of intent with us.
Yeah, and I'm really looking forward for this year and the year to come, because I strongly believe it's going to happen, sooner or later.
Do you see the Nordics as one of the toughest markets to operate in, or how does that compare to other markets when you look at it from a global lens as Fireblocks?
I wouldn't say it's the toughest, because I do believe that the sense for technology is quite high in the Nordics. So if we as Fireblocks, we are very innovative when it comes to technology. We leverage multi-cloud strategies, MPC, CMP. So I think from that perspective, the Nordics are very tech savvy. We have a lot of fintech companies that have been evolving. Even the banks, they have been moving away from on-premise to multi-cloud strategies. So whereas, in some other jurisdictions, this adoption hasn't been come that far yet. So there we have to do a lot of education and convincing work to say, why is multi-cloud MPC better than some on-premise solution? Which there are different challenges in different jurisdictions where you would say, even if you have a regulatory clear framework and people want to move, they don't yet understand the whole new tech. And I don't see this issue in the Nordics, which I'm also very surprised about, because if we look back, the regulator have always been quite accommodating to technology, to innovation, and that it's now not the case. But I'm still strongly believing in that it's going to change.
If we look at Europe, which jurisdictions do you think technologically are the furthest behind? Because I guess you're right that Germany. Yeah. But still, then in Germany, you've seen cases where there has been some adoption with people embracing Fireblocks.
Yeah, I mean, if you just you've been traveling to Germany, if you drive on the Autobahn, you not have any network reception from your mobile phone. But it's the general technological adoption that we obviously see, also a lot of the companies like Trade Republic, very forward, Solaris Bank, very forward thinking. But it's still a very traditional market, a very strong traditional financial market that has its core beliefs in how security, how custody and everything needs to work.
Privacy.
But privacy, obviously GDPR, all of this is very strong in AML. I think money laundering, when we circle back, and it might be now a little back and forward, but money laundering is quite a big question mark for Nordic banks or the Nordic financial institutions. But as you know yourself, we've been partnering with Chainalysis and Elliptic for automated transaction screening. So we have been integrating them directly via API. So any transaction that goes in and out from Fireblocks, you can basically screen automatically, get your results. And there's still this misperception that you cannot trace digital assets.
Yeah.
So there's still a lot of basics where we need to. I don't say that the whole bank or financial institution has that, but they are very smart, innovative teams within each financial institution. But the decision needs to come from the top.
Yeah.
And that's
Well,
the biggest hurdle.
top in the compliance teams as well, right? But
Yeah.
I guess it's not the technology that is the problem. It's more the ability to handle it as an organization and the willingness to handle it as an organization.
Yeah,
Yeah.
definitely. I agree on that. But I mean, you can say it yourself, right, Frank? You've been now with in the Swedish market for a long time. And how have you experienced the journey from retail and also institutional demand, right? As you mentioned, Avanza, right? This hasn't happened since now. So there has been a shift also that you have experienced.
Yeah, I think there is a shift. So retail has always been embracing crypto, essentially, but still the vast majority of the population hasn't. And I think it's because they are technologically more advanced in the Nordics in a way. And you have Bank ID and you have Swish that in terms of a use case, like it doesn't solve for much from an infrastructure point of view that you would have in a country with hyperinflation or anything. Like people believe in their institutions. There's a great trust in their institution. So that has been partly an uphill battle, and then it's very much driven by a media narrative that has not really been educating the population, and it just been fear mongering, echoing kind of the debacles that we've seen around AML with the tier one banks in the Nordics. So yeah, and it's not so much different from what happened with fintech. It was only under the PSD2 legislation, which is similar to MiCA in our case, that banks really were forced to work with the fintech companies to be able to provide these rails to open up, which I think changed somewhat the sentiment. And now fintech companies can get relatively easily banked with the larger banks. That hasn't happened with crypto yet. That is still being treated more like the gambling industry, but it is not the gambling industry. The gambling industry is a very different animal. Cryptocurrencies are here to stay. They're going to be regulated on a European scale. And I think, the financial institutions are definitely still grappling with that fact. And it's a very different animal as well as PSD2 that is more, basically you have the core value still sitting within your financial institution. Whereas if you're looking at crypto, it's actually trying to change the underlying rails of your, the whole financial system, which is a much more difficult thing to sort of like look at the implications for that as a financial institution. So there's a natural reason also from a business perspective that you need to be cautious about it. But then again, it's the internet of value. So can you really afford to stay behind? The answer is no. And I think that is, obviously we see user adoption with 260,000 users. So to state that there is no user adoption is simply not true. There's user demand. There's also user demand, large demand for the certificates on the likes of Avanza. So ultimately, the user is there, and the financial institutions will have to follow, and they will follow. I think under MiCA, they're going to essentially be left behind if they don't follow. And the interesting, I think, is forward-thinking organizations. There's one that needs to make the first step, and Avanza is one that looks at this more pragmatically than others, perhaps. But yeah, as you say, the sentiment overall is changing now.
Yeah. And just on that note, what I've been trying to encourage, and the question I wanted, what are the demographics of your customers? Is it really, the 18 to 30 to 35, or is it, the 40 plus, 50 plus, 60 plus that are part of your core customers?
You're interviewing me now?
Yes, because I strongly believe, that that a lot of the customers that in the end, you as Safello or a tier one bank would probably attract in the beginning different types of age groups for their services, right?
Yeah, I have to look at the latest data. It's still skewed towards men, right? So there's still this sentiment is still quite skewed, like young male adults. That's of course the majority, but you also see a changing picture. Like both age, I think people would be surprised about the average age. It's much higher than people might think. Yeah, like I think I see it in the background here. 25 to 40 is more like the age group that we're seeing. So it's kind of the age group. I think is very much misunderstood. Like no, we're seeing the average age, but gender I think is still skewed towards male users. Yeah.
And that's that's why I think we always try to tell a bank, your competitor is not the bank in the future. It's the super apps, it's the Safellos, it's the PayPals. If you don't move, you're going to lose your clients sooner or later. And then the question is, right, when do crypto companies might want to offer traditional financial services just to complement?
It's all sort of merging, right? That is the thing, and it's a race for that. But then a bank, of course, has different profit centers. So some might be retail, some might be more on the corporate side. But I do agree. No, I think we're out of time, so I'm just trying to wrap it up. Let's see if there's any more questions before we wrap it up. I think we just had a bunch of the same around what we were discussing. No, but we will both monitor black and white, monitor the Nordic landscape. And I think in that sense we make great partners to open up the Nordic market, and hopefully some institutions will see the need to use both. I think with the larger banks, there's still the question of can you have crypto on your own balance sheet? What is the regulatory implication? Mika will solve that. But in the meantime, we are certainly a partner for them to make that possible. Final question here. So what's your bet? Will the big banks be the first to offer crypto, or crypto to offer banking services? All right, we can finish on that note, Niklas.
I still believe the bank's going to offer crypto services. Yes.
All right. Okay. Before the crypto companies are offering bank services.
Yeah. I think so.
You heard it here first.
I hope so.
Okay. I hope so for you as well, and for us. On that note, thanks everybody for tuning in to episode 22. I want to thank Niklas. We'll get you on again, maybe in some time to see how the landscape is evolving. Everybody,
would love to come back.
Absolutely. Thanks for joining. Thanks for joining, everybody. See you next week.
Bye-bye.